Palantir has been on an epic run these past few months, and for those that loaded up in the $6 to $9 range like we did right here on this channel, and many of you guys did too, we are loving this ride up. But there are many of you out there who missed it completely, or you kind of took profits when YouTube and Wall Street said to, and now you are looking to build out a position and wondering what is the right way to do it. Well, I'll tell you the right way to buy Palantir stock so you avoid the disaster that hurts so many people when building out positions. And I know a lot of folks have learned that lesson right here with Palantir stock in the past. And guess what, guys? You can apply this to any stock in the stock market. So even if you don't like Palantir, you can still apply the same strategy to any other stock you want to. And I want to send a special thanks out to all those folks who hit the like button early, guys. That really does help us here. So make sure you do that for all the creators that you love. It really does help out their channels. And the biggest discount ever for my group ends this weekend, where you would have seen those buy alerts in real time in the $6 and $7 range for Palantir back in 2022. All the way up until last summer, actually. We were able to buy shares in the $7 range last summer. And just this year, I sent out alerts in the $20 range multiple times, which those have already 3x or more in under a year and probably paid for a lifetime's worth of membership cost there. So we'll talk more about this in the end, but it's the pinned comment for those who want to lock in the biggest discount ever for my group. All right, so I'm actually going to give you two ways to buy Palantir stock in this particular scenario where it's had a massive run up and now you're left kind of running what to do. And basically you can kind of take these and kind of modify them to suit your own needs if you need to. So either way, it's going to help you deal with the exact situation we're in right now with Palantir stock. Now, if I'm being upfront with you guys, this is tricky because of the massive run Palantir has been on, and I can't lie, it is an epic, epic run. But here's your first dose of facts right here, and you have to understand this, guys. If you're going to own Palantir stock, you have to understand it. You only missed it if you believe Palantir is only a $70 stock, $60 stock, whatever the case is. That is the only way that you actually missed it in regards to Palantir. And if that's the case, then you're right. You did miss it and you need to move on and look at a different stock because Palantir clearly is not right for you at this particular stage. But if you believe Palantir will be a great stock in the future, then you have to start buying at some point in time. And here's the reason why I say that. Because a great stock will 10x multiple times in the history as long as you own it. And guess what? We have not even had one 10x yet, much less multiple 10x's yet. So if you believe Palantir is a great stock, then that right there is the math for you. So you're clearly not too late. Now, let me be very clear about this. That doesn't mean the stock won't fall or trade flat for a long time. It might very well fall because this is an epic run up. And I'm sorry, we are past fundamentals. We are past paying for the future. We're past, a lot of different markers in regards to, I just want to pay a premium for a great stock there. We're past a lot of those stages right now. So either one of those scenarios, it either falling or it trading flat for a long period of time wouldn't surprise me at this particular stage. Now, what all that means, all of what I just said means is 10 years from now, if Palantir performs, this price will be cheap in comparison to that price 10 years from now. And if you use the strategies we're about to discuss, you will be very happy in the end. That's the bottom line if Palantir performs to that great stock kind of category. That right there is the bottom line. Now, of course, if you only think it's a $60 stock, well then, or $70 stock, whatever the case is, okay, then you know exactly what to do. But even if I went out there and I bought all my shares today, I think in 10 years, if Palantir performs to where I think they can perform, I'm going to be a very happy shareholder over the long run, but that doesn't mean I want to go lump sum all in right now. You guys know I don't believe in that. That's not something that I do. There are much better strategies to make sure you have the correct and a much better average than you'd have by just simply playing that game. So I'm not going to discuss that here today. That's not one of the strategies. And let me just kind of caveat this a little bit further here. If you try to play all the games out there on YouTube and CNBC and all those other folks out there telling you to do this and buy that and sell this and hedge that and whatever the case is, oh, this trend line's here, so it's going to come back down, all that sort of stuff like that, you're going to get burned over and over again. And I know a lot of you guys have experienced that in the past with Palantir. Hey, all the Palantir bulls were out there telling you to sell it whenever it fell down to $7 and, Alex banged the table and now we're questioning the company and I don't know, ridiculous stuff like that. And there was other bullish YouTubers who were like, well, this line's here, it's guaranteed to fall back down. And instead it ran up another $10 the opposite direction and has never come back down. You got to ignore all those sort of games and all that stuff and understand those strategies are fool's gold in the end. That is why dead people outperform hedge funds. That's the bottom line. Dead people outperform traders. Statistically, that is true over and over and over again. You can see it out there. Go out there and check a lot of the hedge funds and look at just a simple return on the S&P. And man, there's a lot of hedge funds that are negative, are just now hitting 10% for the year. And obviously, if you just had Palantir, I don't know, you're up what? It was what, 15, 16, $18 at the beginning of the year, all the way up to 70 right now. I mean, you got 10 years worth of their returns in 1 year here with Palantir. So don't play those games. That's not what this is about. That's not what we're going to discuss. So the first strategy is to execute a simple DCA. Now, guys, I know it seems counterintuitive here to not start a DCA and to kind of wait for it to fall. It has to fall. It's overvalued. It's all these other things. And I would agree with you there on all of those points. It absolutely is. But guess what? I would have said the same exact thing to you at $40 as well. It's overvalued whenever it got up over $40 and started that run. And if you would have started your DCA then at that stage, sure, you've been buying this run up, but your average is much lower than where the price is right now. And that's the reason why I don't play a lot of these sorts of games, because it's really, really hard to guess and try to figure out where that is. That's what the entire point of a DCA is. It is to take all that gamesmanship out, to take all that strategy per se, whatever you want to call it, completely out of the picture. So that way you're just simply buying shares. Meaning, yes, you're buying shares right now at the highs. It sucks, I agree. But you're also buying at the highs at 40 and at 50 and at 60 and so on. And guess what? It also works in reverse as well, because when you're looking at long-term, now remember, this is a long-term buy and hold investor. If you think 1 year is long-term, you're thinking like a trader. 1 year is not long-term for me. I'm thinking 3 to 5 years out. Obviously, I hope things for me in terms of my big picture planning are decades out. So that for me, that's long-term. So whenever I'm looking at this long-term, sure, I'm going to have periods of time right here where I'm probably overpaying. And that's okay in a sense, because I think Palantir is going to be worth a lot more than $70 5 years from now, 10 years from now, maybe even 20 years from now. Imagine if Palantir performs the way we think it is 20 years from now, everybody's going to think that your buys today at $70 were genius buys. That's the situation I find myself with an Apple. The stock fell 40% after I bought my initial shares of Apple, because I was just into investing like a lot of folks did. I just threw money at it and thought, well, let's see what it does. No strategy, no nothing else like that. And of course, it cratered down 40%. At the time, you look like a complete moron, right? I most certainly looked really, really dumb. But then you look at those shares where just a few $1,000s is worth more than $1 million today, and you look quote unquote genius. That's what a great company does. It covers up your mistakes there. So even your shares you're bought right now, trust me, share count's what mattered. I wish I would have just kept buying shares even at that overvalued price at Apple back then, because I have a lot more money now. I did eventually, so I don't have quite the number of shares at that price that I would really, really want at the time. So kind of view it that way. I also understand cycles are going to come and go. And if you would have executed a simple DCA from the start, you would have been buying at 7, 8, 10, 12, 15, 20, all those sort of things like that to kind of help balance out and create an average to where you're very, very happy over the long run. That is what a DCA does. You no longer have to worry. The money comes in and you simply buy the allotted amount of shares you can buy at the price that it's at that day. And that's it. And you move on and you do the same exact thing. If you're doing that every payday, you do that every payday, once a month, whatever your schedule is. That's all that you do, and you move on with life. You don't have to time anything. You don't have to worry about anything. All you're doing is simply tracking the company, listening to the earnings calls. Hey, great. Earnings calls look great. All the numbers look good. Happy to continue my DCA into that stock, and you move forward. And that is it. That's how simple that strategy is. And it's really, really difficult to beat. Traders can't beat it. The only real way to beat it statistically is by doing the next strategy there. And even at that, you're not beating it by massively. It's not like you do this one, you make a little, you do this one, you make a lot. It's not that. You're just getting a little bit more alpha out of it here with this next strategy. But in terms of simplicity, this strategy, DCA, is far simpler. It is way easier, and it's definitely the most prudent for the vast majority of folks out there until you get more experience with investing, and then you can start doing the second strategy. And the second strategy is a modified DCA. Now, this one is a little bit more complex, but just to kind of give you guys an example of this, this is what kept me from buying at $40 per share back in 2021. I really, really wanted to own stock. I actually got a tip off from a friend who had worked with it within a defense department and said, hey, this company's going public. Trust me, you want to own it. They're incredible. So I wanted to own the stock, but it immediately ran up to $40 shortly after DPOing, and I just didn't get a chance. By the time I had done my due diligence, kind of gone through some of the numbers, by the time they had a couple of earnings calls underneath their belts, hey, it was already rocketed up, and I knew that's way overvalued. And so using a modified DCA, I didn't start my DCA yet because I knew, well, it's got to come down at some point in time. We are way beyond fair value here, at that particular stage. So it kept me from doing that. But then it also allowed me, whenever Palantir fell down to the $6 and $7 range, to just basically buy heavy shares. Not a regular DCA, I mean, let me go ahead and modify my DCA and buy a lot of shares of Palantir down in that range because I understood exactly what I owned. And my modified DCA told me the lower the price gets, the heavier my buys get. So let's kind of jump into that strategy right now. So the first thing you got to do is you have to do your due diligence on the company so that way you understand the company intimately, right? If you don't understand the company on a very, very high level, you're going to get scared whenever the stock falls down to $6 like Palantir did, and it's looking like that $5 is coming in range. You're going to get scared and you're going to sell because you don't understand what you own. So that due diligence is key to not getting that fear out at that particular stage, not getting, shooken out of your shares, whatever the heck you want to call it. You won't get scared at that stage. You'll get excited instead because you understand what you're on. So that's due diligence right there. The second piece of that is you have to get a valuation for the stock. You have to know what the valuation is. What is fair value for the particular stock? So that way, am I overpaying or am I underpaying? And I'm not saying it's wrong to overpay. Just you need to be able to understand that in order to execute a modified DCA. So that way I know when to go heavier and when to lighten up on my DCA. So essentially you do your due diligence, then you get that valuation where you find fair value. And then once you hit fair value, you go ahead and set your price target at that stage where you want to start your DCA at. Again, that can be a little bit rich. It can be a little bit below value. It's up to you at that stage and what your risk tolerance is and kind of, how much Palantir you want. If you have high conviction and you just want as many shares as possible, you'll set that price target higher. Obviously, if your conviction's a little less and you're just kind of like, if I don't own it, I'm okay with that, then you set that one a little bit lower. I want to own it on a discount if I really want to own that stock. You can do that nature. Or maybe you have, more than enough shares of Palantir, so then you only want shares on a discount. Then you set that price target down there. But you set that price target there, and then as the stock moves up and down, and of course, you're adjusting your price targets quarterly because, of course, the numbers change quarterly. So, of course, the valuation changes quarterly, which, of course, means you need to change your price targets if you want to quarterly. So as those things all happen and as the stock moves, you're essentially buying. So hits my price target. All right, I start my DCA right there. Hey, it wants to DCA, DCA, DCA. It eventually falls down to another level there to where I'm like, okay, I'm going to increase my DCA a little bit. Now, you can adjust that however you want. Some people like to use percentages. Some folks, it's just a random dollar amount. There's not really a right or wrong way. But the point being, as the stock falls, I'm increasing my DCA amount that I'm DCAing into the stock heavier and heavier and heavier. So that way I'm buying more shares whenever it's significantly undervalued. And then as the stock runs up, once it kind of gets above my price target, I might continue to DCA into the stock a little bit, but I'm going to buy less shares at that stage. And at some point in time, it reaches a point where if I have a full position, I'm not buying any shares at that stage. Now, if I don't have a full position, then at that stage, I may go ahead and continue to add shares because remember, share count's what matters in the end. But once I have my full position, which a full position is different for everyone, guys. If you have a $10,000 portfolio, that's going to be completely different than somebody with a $10 million portfolio. So there is no right or wrong answer here. It comes down to your conviction in the stock, how much money, for me, it's how much money do I want to put at risk on a particular company. That's what it is at that stage. And then, of course, now I'm well into bonus shares on Palantir, for example, and I know it's a great company. I know it's going to do well for me. So I'm just simply adding shares as it makes sense because I'm well above the dollar amount that I was willing to risk to begin with. Because as a stock moves forward in its journey, the risk gets taken more and more and more out of the stock as they continue to perform, right? We're way over here at the beginning where there's, they're not profitable and they're highly speculative. Well, they got to kind of earn that money per se. Palantir went through that journey in regards to this, right? I mean, whenever you were looking at Palantir, whenever I first started looking, I knew that, hey, we didn't know when they were going to be profitable. I like the financials, but they definitely had some good quarters, some not so good quarters, definitely in between, everywhere in between that spectrum there. So whenever I was looking at Palantir, and then as I started buying Palantir, I didn't just immediately run and fill out my position. I let them earn more of my money because they were still speculative at that stage. And as they continued to get better and stronger and the financials got more predictable and they continued to execute on what Alex was saying they were going to execute to, then they earned more and more and more of my money. And of course, then they finally turned profitable. We're like, hey, this is awesome. Stock finally goes on a little bit of run. That's great. Hey, still adding shares. And then Wall Street wanted to get dumb and beat it back down to $7 again. And people got scared. I didn't understand it all. I'm going, wait, the numbers are better now than they were last time they were at $7. Like they've taken risk out of the stock for me. So I'm going to risk more money into the company at that stage. And that's kind of the way that journey went with Palantir in regards to continue to add to that stock. I added it multiple times this year in the $20 range because I already have all the shares I wanted. I wanted bonus shares and Wall Street got dumb and gave them to us at that particular stage. But that's kind of how all that sort of things led me up to my modified DCA today, where yes, if I was building out my position, I would be continuing to add. I would just add less heavy whenever it gets overvalued. And then whenever it gets undervalued, I'm adding heavier, and it is as simple as that. It is a DCA. It is just simply a DCA where you just kind of, as the valuation gets better, stock price sometimes can run ahead of valuation. Okay, I'm going to add a lot less. Like right now, I may be adding 0, or if I was filling out my position, or just adding a few shares. And of course, earlier this year, when it was down at $20 per share, right? And that was just in, I think, August or so, right up in there, that time frame. Definitely at the beginning of the year, you could definitely get shares in that range. Okay, I'm going to add a lot heavier at that stage because that was significantly undervalued at that particular point. So that's kind of the way a modified DCA works. You're still DCAing. You're not trying to guess the tops and the bottoms, and I'm not selling and then trying to dial back in whenever it falls down below the trend line. All those other goofy games like that that are proven to lose over the long run. I am simply taking the DCA concept and just adding a little bit of strategy to it in regards to the DCA to get a little bit of alpha in the end. So that is exactly how I would buy Palantir stock today in both of those situations. And remember, the biggest discount ever for my group, where you get 5 courses, you get free coaching, you get access to me anytime you want. Jump on our live Q&As. We got the best 6, 7, and 8-figure Discord out there helping you become a better investor. That is what we're all about. You want to see all those buy and sell alerts in real time on Palantir. See my complete watch list with price targets for all the stocks I'm looking to buy. Just, guys, there's so much involved in the membership. Check out the pinned comment and see if a membership's right for you, and take advantage of the sale before it ends this weekend for the biggest discount ever. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.